We speak to Michael Oyebola to discuss money market and fixed income funds in Nigeria. FBN Capital is launching one today, and Michael Oyebola, Director Head of Asset Management, give us his thoughts on the launch. Thank you so much, Michael, for joining us on the show today.
Thank you.
And the key thing I want to find out is why now? I mean, we're looking at the equity markets today. A lot of people say the fixed income market has dominated capital markets for a while now. So there's clearly a lot of interest there. But from your perspective, why now?
Why now? Well, the markets is there. We need investors to come into the market. The fixed income market is there. Investors haven't really taken, only institutional investors have actually had access to it. The funds we're launching is geared towards the retail end, the affluent end, and high net worth individuals. So the market is there for everybody to take, and FBN Capital would like to slice of that.
Well, clearly the risk of the equity market has been clearly dominated,
Correct, yes.
Well documented with the crash we've had. But what kind of risk are fixed income investors exposed to if they are looking to invest in bonds and money market funds?
Most of the time, it's a reinvestment risk. The yields are currently high at the moment. For the fixed income fund, which is geared towards federal government bonds, state government bonds, and corporate bonds, once you invest, the current yield to maturity is actually very, very high. You're talking about 14, 15, 16%. On the money market fund, the fund itself actually has to have an average duration of about 90 days. Now, when investors invest in there, the risk they tend to have is just the reinvestment risk. Now, interest rates have remained high at least since October last year, and it may continue. We do believe that interest rates have actually peaked, but at the moment, investors can still continue to get the returns they want.
But what kind of appetite would you say Nigeria has for this type of products? I mean, over the years, there's been a lot of talk about mutual funds. They haven't really, I won't say Nigerians have really come to grips with those kind of products, but do you think that is changing now?
I think that is changing. Investors are used to, yes, savings products, but in doing financial planning, this is another avenue for them to actually take. When you look at your balance sheet, it shouldn't only be cash. You should actually take out investments, whether it's short-term, medium-term, or long-term. These funds are actually geared towards the medium and long-term, right? On the short-term end, yes, the money market fund focuses on that. On the medium-term end, the fixed income focuses on that. For the money market fund, what we have is we pay quarterly coupons out to investors. On the fixed income fund, that will be paid every half year. So it is actually geared towards the low risk end of the market, right, whereby the exposure, they won't have exposure, there's no exposure to the equity markets, right? So the risk they actually have is if interest rates come down.
All right, so of course, you're the fund manager, you're the expert. Your thoughts on the fixed income market and the direction of yields? Clearly, many people talk about the fact that the tightening cycle, we've probably gotten to the peak of that at the Monetary Policy Committee. But where do you see yields going, especially if you're looking to invest in fixed income now?
We actually think yields have stabilized. They have peaked. We think yields have actually stabilized. The ones that are actually a bit volatile at the moment are the money market rates, right? That tends to go up. I mean, over the past few months, we've seen them go down as low down as 12, come back up at about 15% at the moment. Federal government bonds, they've actually stabilized, right? On the long end of the curve, which is the 20-year bonds, they've really stabilized. There's not much movement. But on the shorter end, right, it's been a bit volatile. Now, you will see that for investors, in taking positions in there, it actually just bodes well for them right now.
All right, and the final point for me, foreign investors looking to invest in this, why should they consider a mutual fund as opposed to investing directly?
Nigeria is still an investment destination, and fixed income is an integral part of the portfolios. Whilst the larger investors may actually sort of say they can come into the market and do it themselves, in terms of other investors, whether it's high net worth individuals, family houses, or other fund managers, the funds are open to them. It is tax-free. They get a CCI when they come into the country, and then when they're remitting the proceeds, we actually pay the proceeds. The proceeds will be paid to them. So it is also open to them. It's welcome to them. The fixed income market for Nigeria is still open to them, and we look forward to welcoming them.
And you're looking to raise how much from these funds?
For the money market fund, we're looking to raise 1.5 billion, but remember the funds are open-ended. For the fixed income fund, is also 1.5 billion, which is about $10 million each, but the funds are open-ended, and we're actually targeting to raise much more than that.
Well, best wishes to you. Michael, thank you for giving us your thoughts on your fund, and of course, we look forward to seeing how the market receives that.